The global trade war has intensified. Trump versus China, Trump versus Mexico, Trump versus Canada. What exactly is happening? On Tuesday midnight, Donald Trump confirmed that he is going ahead with his long-threatened tariffs on imports from China, Canada and Mexico. That means 25% tariffs on goods from Canada and Mexico, along with a 20% levy on Chinese imports, are now in effect. However, China did not wait. In retaliation, China also announced additional tariffs on select US goods. Starting March 10th, China will impose additional tariffs of 10 to 15% on select US goods, including chicken, wheat, pork, corn, and cotton, as per the Chinese Ministry of Finance. This has escalated the ongoing trade dispute between the world's two largest economies. With tensions rising, Canada and Mexico are also considering countermeasures, adding to global uncertainty. Now, how will this impact markets and global trade dynamics? Indian stock markets have already plunged a lot in the recent times due to multiple domestic and global factors. Even US markets were not spared. Nasdaq and S&P 500 fell between 1.7 and 2.5% in the last session. Stocks stumbled across Asia on Tuesday as investors braced for new US tariffs on Canada, Mexico and China. Tech stocks faced heavy selling pressure, dragging Japan's Nikkei down 2.2% and Taiwan's benchmark down 1.3% intraday. Asian equities mirrored sharp losses in global markets as trade tensions intensified. So what's the impact on the US? Experts warn of rising costs for businesses and consumers, disrupted supply chains, and diplomatic fallout. This will also add to costs for US companies that will bear the cost of those tariffs. Now, why does Trump want to slap these tariffs on Canada, Mexico, and China? The US president claims that import tariffs are key to national prosperity. Defying warnings from mainstream economists, he remains confident that tariffs can address the country's economic challenges. In one of his interviews, he said, "It's a very powerful weapon that politicians haven't used because they were either dishonest, stupid, or paid off in some other form. And now we are using them."
It's a very powerful weapon that politicians haven't used because they were either dishonest, stupid, or paid off in some other form.
Now, coming to the impact on Indian markets, as per Dr. V.K. Vijay Kumar, Chief Investment Strategist at Geojit Financial Services, the uncertainty triggered by US tariffs is disrupting global trade. The 25% tariff on Canada and Mexico, along with the 20% tariff on China, now increased by an additional 10%, is turning threats into action. Retaliatory measures are yet to unfold, but they are inevitable. If Trump's tariff policies continue to expand, the impact on global markets could be severe. Kranti Batini of Wealth Mills Securities noted, tariffs will increase trade volatility and market uncertainty. While these are initial reactions, the impact on US consumers will be felt in the short term. Eventually, the US may seek an amicable solution. Abhishek Banerjee of Lotus Dew Wealth highlighted the inflationary effects of trade wars, particularly on emerging markets. Tariffs act as a tax on consumers, slowing discretionary spending and creating economic headwinds. While developed markets are less affected, emerging economies including India and Mexico could face greater risks due to their reliance on imports. Government spending will be crucial to sustaining GDP growth. Well, the exact impact remains uncertain for now, but it will undoubtedly affect emerging markets like India and global trade. We'll keep updating you, so stay tuned.